Okoyemi Oguntade is my next guest on the program now as we turn our attention to developments with regards agri-commodities. Okoyemi Oguntade is an economic research analyst with Financial Derivatives Company. Okoyemi, good morning. Thank you so much for joining me on the program.
Thank you for having me.
So, have domestic commodity prices responded to MPC's do-nothing decision?
Right now in the market, prices are still relatively the same, and that this is largely because of the fact that usually there's a time lag between when there's a policy implemented and when this policy has an impact on the real economy, the agricultural sector at this point, or particularly in this point. So what we're seeing in the commodity market is that prices are still flat, but looking at the price of maize, we've seen that the price of maize has increased this past week to about 13,250 naira to 50 kg bag, and this is largely because of the fact that we've seen poor harvests with that particular commodity due to the flexibility or the weather changes we've seen so far in the past couple of weeks with respect to the heavy rainfalls and flooding. And also, aside from the weather patterns we've also seen that most farmers are taking advantage of the fact that they could export this maize or smuggle it to neighboring countries and earn forex and then convert it back here in Nigeria to make a killing in profit. And this is not surprising because we've seen this trend in other economies outside developed economies, and we've seen this happening in Russia, we've seen this happening in Argentina, and this was one of the reasons why they introduced the export taxes on some certain commodities such as wheat and corn, because they were trying to make sure that traders weren't or farmers weren't exporting these commodities at the expense of domestic consumers, because what they do is they try to export this, try to make gain by converting it back to their local currency because the currency is weaker. But then what we see is that the domestic consumers have to suffer for this, because then you have shortages within the local economy. And so more recently we've seen this in Brazil with the weaker Brazilian real. We've seen that sugar farmers are trying to export more sugar out there so they can make more profits in terms of local currency.
Well, Okoyemi, of course, this would definitely have an effect on those poultry farmers who use maize as part of the feed for their stock.
Yes, definitely, it would, because for poultry farmers, they use this as feed, like you rightly mentioned. And then if you're even looking at the manufacturing sector, the fast-moving consumer goods, there's some certain manufacturers that make use of maize for production. And if we're seeing that the price of maize is increasing, it's definitely going to affect this has cost implications. And what we've even seen in the market is that some manufacturers are considering importing barley and importing other produces, other products in order to support, because looking at the domestic prices, it appears domestic prices are even becoming more expensive than importing these commodities.
Well, you know, according to your report and according to what we see, the Naira loses more at the parallel market. It's closed at about 428 to the dollar, and at the interbank foreign exchange market, 310 Naira. 8 kobo. Do you think anything can be done in the short term, especially for companies that source forex to buy the products that they use?
Well, at this point in time, looking at the FX market at 428 and at 310, it's high, and in the short term, it's all a matter of dollar liquidity coming in from the government. I know in recent times there's been a lot of discussions out there about the government trying to make some asset sales in order to boost dollar liquidity in the market. I mean, that's not necessarily a short term, because this actually takes a long time. The procedure that the government has to go through in selling assets it's a bit long. It's just one of those things that we have to deal with. In terms of dollar liquidity, we're probably still going to have that issue in the market. But in the short term, I guess the manufacturers would have to go through to the BDCs or the parallel market to source for forex, which is obviously more expensive.
So just quickly tell us, in your recent survey, how does it still look like in terms of purchasing power for consumers? Has that continued to contract, or has there been an easing? Have people found a way of getting around the issues and still being able to put money in their pocket and put food on the table?
what we're seeing in the market right now is we're seeing sticky wages. Wages aren't moving upwards. Wages are relatively flat. And in terms of purchasing power, obviously that is with the weaker naira and with the rising inflation, that's obviously weaker purchasing power for the consumers. In response to that, what consumers have tried to do is try to cut down on unnecessary expenditure to make up for the lower purchasing power. So in the short to medium term, that's what we're probably going to be seeing in the market. We'll see lower demand on that side, or lower quantity purchased for some certain products to make up for the lower purchasing power.
A case of scale of preference. Well, thank you so much, Opeyemi, for coming on the program.
Thank you for having me
this morning, and of course giving us an insight to what's going on with regards agri commodities.